The Dow's big rally today led by shares of Disney, hitting an all-time high after announcing the details of its new streaming service last night. Disney CEO Bob Iger sat down with our own David Faber on Squawk on the Street earlier today.
We're going to continue to put resources behind them to create great programming. I think long term you have to put the consumer first. So if going all the way back to how this started, if we put Hulu and ESPN and Disney Plus into one product, the only way you can get these things is one, that's doing exactly what the consumer today doesn't want. Now, if there are consumers that want it that way, we'll give it to them that way. And hopefully, ultimately, in all three, one username, one password, make it really easy for them to do it in a discount.
Shares of Disney posting its best day in nearly a decade off the announcement. Will the new streaming service live up to this hype? What do you do with an 11.5% gain on a product that it won't launch for years?
I wouldn't do anything because people were looking for something to actually give Disney a reason to break out. Everyone that's had this issue with Disney, been trading in a range for a long time, you got your issue. And this was a catalyst. Whether you believe they're going to get to 60 to 90 subs by 2024 and that profitability will start to happen, really almost by 2023 and the spending won't be that negative. Look, this was a very important announcement for Disney, and kudos to a couple of the analysts out there. Citibank was out there with that call. A lot of people missed this. And meanwhile, this has been telegraphed.
I probably wouldn't chase it up here, right? As you said, this is a long time. But what to me was most interesting was contrasting their, release and their description with Apple and how lacking Apple was. I mean, just in details about what their product is. And then I also, if Disney is coming at us with everything and they're spending what they have to spend, it really makes me wonder, how does Netflix keep this valuation?
Down 4.5% today.
Down 4.5%.
Right, which isn't that
Because I don't think the numbers. I don't think people are going to go out. I think there's enough of the pie for people to have Disney, for people to have Netflix, and you don't see it in the polling data that people are going to drop Netflix.
I'm not saying let's say that.
I think they're going to have both.
But they're only going to have so many dollars to spend per month. So part of the Netflix valuation is based on, their users are absolutely price insensitive. They can continue to hike price at will. I don't know that will be the case going forward.
Definitely not the case.
Guy.
It's interesting. I mean, now on May, so we said it last night, above 120 is the breakout. Obviously, Tim just alluded to that. So it's broken out on tremendous volume today. We'll see. However, now you have Disney trading close to 21 times next year's numbers. That's a pretty hefty valuation given this announcement. And they report on May 8th. So the question you have to ask yourself is, do you take money off the table into earnings? Or to Tim's point, and I don't know the answer, or do you let it ride in earnings? But you have to know that it's coming, and it's coming soon.